Hi, guys. Welcome to the 13th episode of WTW, the weekly trading wrap up for the week of February 10th, 2025, where we talk about the week in markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. Um, as usual, we're looking at the S&P 500, that's SPY, and the week of the 10th starts here. This is a Monday. It's tough to see. Let me open it up a bit. This little candle here is a Monday, Tuesday, Wednesday, big Thursday, and a muted Friday to close the week. So overall, it was a good week, and we closed near highs. Okay, the market is near highs. I don't want to tell you what happens when it gets to new highs, but I think you know. Okay, there's an adage in this game is that you never short a market that is going to make new highs or is making new highs. Okay, so this week, let's start on Monday. Okay, so this week it was a fairly light week in terms of data. It was basically this whole week the narrative was China and inflation, China and CPI. Okay, CPI and PPI. So the CPI is going to come out on Wednesday, which is this candle right here, and on Thursday was the PPI. Okay, so that's the big relevant macro data that came out this week that we should look upon, but nothing else. So on Monday, we're coming into the day here where Trump over the weekend announced 25% tariffs on aluminum and steel. Okay, so of course, let's see what happened. Let's go U.S. steel. Okay, so look at this. This is what happened on Friday, but this is Monday U.S. steel. Okay, very volatile on Friday, but on Monday not that much. So it's really not having a big impact. These tariffs are not having a really big impact on domestic U.S. companies, U.S. steel companies. Okay, so I don't know if there's a trade there. So me personally, I'm not trading that. Okay, so I don't like trading these crazy moves based on crazy catalysts that might or might not happen. You're just rolling the dice. And as you can see, even if it's happened, even when it happens, the reaction is not that great. Okay, maybe it was a buildup here, and then this was a sell in news. So you had to basically anticipate tariffs on steel. What is it? By December. So 2 months before, you had to anticipate a tariff on steel, and then trade it. So we don't trade on inside information, and I don't recommend anybody does either. So I don't know how to play it. To me, this is kind of like a crapshoot, a roll the dice type of trade, which I don't like getting into. Okay, so that was the big news coming into Monday. But what happened back on Monday? Okay, so Trump announced tax cuts. Okay, this was not covered at all. I mean, that to me is a big deal. It's part of Trump's two-pronged attack, I would say. Like, he loves tariffs, so he gets revenue there, but he wants to mitigate the effect of tariffs by lowering taxes for everybody else in the states. So he wants foreigners to pay a tariff while alleviating pressure on the American citizen or consumer, what have you. So people are forgetting that tax cuts is good for the economy, and it's going to be rocket fuel. Okay, but it was ignored on Monday. It wasn't even reported. Okay, so people always focus on his controversial tariffs agenda, but they completely ignore the second half, which is tax cuts. And that's something you should look at because that is a fundamental issue that will affect stock prices going forward. So I think that's a pretty big deal. Okay, so maintains the bullish narrative, helps the bullish narrative. Okay, so what else happened on Monday? It was pretty busy on Monday. Trump's 10% tariffs on China came into effect on Monday. Okay. However, he offered the same deal to Xi as he offered to Trudeau and Scheinbaum, which is that if you stop fentanyl coming across into the U.S., because that's where it originates in China, the 10% tariffs will disappear. Okay, so that wasn't a big deal. So the market doesn't really react on that tariff news. Okay, so that's not. Even though we should look at the China versus U.S. trade war, I think they're going to come to a deal, like they always do. Okay, it's always overblown. These tariff moves are always overblown, and you know that. You know my view when it came to Trump and tariffs is the same playbook as 2016, in that the market's going to keep reacting a lot in the beginning and less so as he keeps using that same tactic over and over again. Okay, because market knows what's going to happen and it reacts. Okay, so that's it on the tariffs on Monday. And what else happened on Monday that I like to see? Gold. Okay, this is the Monday. Let's mark it. Okay, this is what happened. This is the chart of gold. Okay, Monday, Tuesday, Wednesday, Thursday, and Friday, big down day. Okay, but as you can see, I love gold. It broke out of this great pattern here into new highs. Okay, and it's almost at 3,000. Okay, almost at 3,000. In fact, I sold half my GLD position at 270. Okay, because that's gold, but I trade gold via GLD. I still have my physical. I won't get rid of that. But GLD Monday. Where's Monday? Here, Monday. Gap up. Okay, gap up on Monday. Okay, I sold it later on, but because the reason I sold it is half is because it's going to approach the psychological level of 3,000, and I think it's going to be a pullback. Okay, so that's why I sold half on the Thursday, but that's neither here nor there. What I wanted to show is that gold new high is 29. That point it was a new high, 2,900, and the market was going nuts. Okay, so gold hit a new high. They say it was because China is pushing their insurance companies into gold. This is just, market news to try to justify a move. But the reality is, and we know, is that foreign central banks have been buying gold, and they continue to do so. And the biggest one that is buying gold is China. Okay? And for me, I think the reason that China is buying, this is just pure speculation, but I think China, it dovetails into what we were thinking about the market previously, the Chinese market previously, in that China is getting ready to stimulate its economy because its stock market, FXI, has been a laggard. This is FXI, which is the China large caps. But as you can see, it's been a laggard for a long time. And the high is like 54, like a triple top here. Okay, and here we're going all the way back to, this is 2015, this is 2018, this is 2020, 2021, okay? But look, it's been at a downturn. It went from a high of around 54 to like 21. Now it's at like 35. It rallied in the past week, like Chinese stocks. If you look at them blow up in the past week, they've rallied pretty well, okay? And the reason why I think they rallied is because she's going to print money very soon. That's our anticipation. But he's not stupid. The Chinese are not stupid. They're very smart, okay? As he's doing this, he's also buying gold, in my view. China is buying gold to mitigate the effects of a massive money printing campaign coming. Okay, that is my view. That is why I think the Chinese central bank is buying more gold than it has to in terms of the BRICS currency. Everybody's saying the BRICS nations are buying gold. Okay, but I think the biggest one by far of the BRICS nations buying gold is China, because it's not just an international play, it's a domestic play too, because they're getting ready to print and they want to mitigate the effect on their currency, which is going to tank when they print, by having a large gold stash. That is my view. Okay. So another thing that the reason why gold ripped on Monday here, in my view, okay, another tailwind to the gold price continuing to be supportive and continuing to be strong, despite what some people are saying, it's too high, it's too fast, whatever, all the naysayers, as it's going up, is what you want to hear, actually. It's like a wall of worry, but for gold, instead of the market. The reason that I'm still bullish, okay, even though I took some profits on the psychological 3,000 level, is that for the first time ever, it seems that Western ETFs are experiencing inflows, okay, like the GLD. For the longest time, as gold was going up, this whole time, really, since all of 2024, okay, GLD, despite it going up, it's had net outflows, okay. It just has to track it because gold is going up. It has to track gold, so it goes up because it's tracking gold. But really, there have been no American buyers during this whole up move in gold. This is GLD, okay, the ETF. Okay. The reason you see all these gaps is because it doesn't trade overnight. Okay, whereas gold, it's clean. Okay, it trades 24/7. So let's go back to gold. Okay. So the reason why, I mean, if you have Eastern BRICS nations, let's say, buying gold heavily, okay, and Americans not doing anything here, and then they start buying with the East, like you have West and East starting to buy, that's a big deal. Okay, that's more rocket fuel. Once the Americans, I say Americans, but I will say the West. Okay, but when I say Americans, I mean the West. I just have that in my head. When the Americans start buying gold, okay, with the Chinese, forget about it. It's going to go up. Okay, they're going to have pullbacks like here, but if the fundamentals don't change, you want to be a buyer. Okay, and yes, I sold my GLD, which is my trading position. I didn't sell any of my physical gold. Okay, and that I don't plan to sell for a long time. Okay, because as you can see, as the week went on and gold retraced a bit, I'm expecting it to go. If it retraces and hits these highs, this is where I re-enter. I'm going to buy again. Okay, I'm basically waiting to buy again. Okay, because I sold half on this Thursday when it hit 269, 270 on the GLD. Okay, and I was long GLD on the breakout here. Okay, and then another one at 225. Where is it? Around here when it was basing. 225. Here. Around here. This is 220. Around this level is when I bought my second tranche. Okay. And I sold it half here. Okay. So I locked in some profits, half the profits here. Still waiting to get back in. Okay. I don't mind buying higher when I know the fundamentals are in my favor. Okay. So 225 is when I entered it before. Around this level, which was last year. Clearly remember it. And when it's summertime. Yeah. Around here. So that's my view on gold and my actions on gold. How I'm handling it. How I'm handling this long trade that I've been in for a long time. Okay, I expect to pull back at 3,000, and 3,000 is GLD about 277. So I got rid of 277 corresponds to gold 3,000. Okay, I got rid of it at 269, 270, half, and I'm going to get rid of the other half at 277. So I'm going to get rid of all my GLD trading position if it bounces back up there. If it goes down, I'll buy it back and get rid of it at 3,000, half, and hold the rest. Because the second time, when it hits 3,000, the second time it's probably going to break to the upside. Okay, that's my view on gold. So let's go back to SPY. We're still on Monday. Okay, and on Monday, something happened. Elon Musk and his team offered $97.4 billion for OpenAI. Okay, so I don't know how to trade this trade. Maybe through the AI stocks. I don't know how to trade that OpenAI type of deal. So AI stocks are still doing well. And listen, if the market's bullish, the AI stocks are going to go up too. So are the semiconductor stocks. And so are the AI adjacent stocks like GEV. Okay, when it got destroyed, it's still performing well. Okay, and the AI adjacent stocks are this stock. CEG, Constellation Energy, has a lot of nuclear power plants. And look, it's coming back. It's making up the gap, and I think it's going to close it, okay? And I am long these stocks. I am long both CEG and GEV. I bought it on the pullback, the first day, okay? Call options, okay? I've limited my risk. So I still like the AI adjacent stocks, okay, because I'm still bullish the market. I just don't know how to trade the Musk taking over OpenAI. I have no idea. So I'll just trade the AI space in the way that I'm most comfortable. Okay. So that's it for Monday. Let's move on to Tuesday. What was the big thing that happened on Tuesday? Nothing. No big macro day. Everybody was actually, it opened lower and then it closed higher on the day. However, if you looked at the underlying structure of this market on that Tuesday, because there was no macro data and it was the day before CPI coming out on Wednesday. Okay, so if you looked at the how can I put it? The undertow, no, like underneath the hood of this market, you'd see that a lot of stocks were red. A lot of my stocks were red. I had a down day. I had a relatively big down day here, considering that the market was up. Okay, because they were taking profits before CPI. The people were taking profits in these stocks, locking in some gains before the CPI print tomorrow in case it was quote unquote hot and the market tank. Okay, so that's what happened on Tuesday. It was a very light and non-eventful type of day. So let's move on to Wednesday, the 12th. Okay, and yes, as expected, CPI came out and it came out hot. Okay, this consumer price index came out at 0.5% month over month, and they were expecting 0.3%, so that was very hot. Okay, and that's the headline number. Core CPI came in at 0.4% month over month, and when they were expecting 0.3%, so there was a hot print. Okay, so the market, the market on Wednesday, this candle right here, the market opened up lower. Let's look at that day by blowing it up a bit to a 15-minute chart. Guess which day? Guess which day? This day. Gapped down lower. This is Wednesday. A 50-minute chart, so each candle is 50 minutes. So that's 9:30, and it ended the day, where is it? Wednesday. Ended the day here. Okay, 6:03. It opened up all the way down here. Here, it went even lower to 598. I remember I was 600, 598. Okay, that's a big drop from the day before, which was 605. So big down day, big open lower, but bought back throughout. Bought back throughout the whole day to finish at not exactly at the high of the previous day, at the close of the previous day, but still made up more than half and looking strong. Okay, why? Let's go back to the day. People sold on Tuesday to lock in gains in anticipation of a hot number. They got a hot number. They got exactly what they wanted, and market went up. Why? Well, because most of that inflation was due to shelter inflation, and that has a 12-month lag. So, and as you can see that going forward, that shelter inflation was coming down up to these days. If you looked at it on a month-by-month basis, okay. So there's a huge lag on that. So we know that's coming down. And if you look at oil, which is the canary in the coal mine for inflation, if you looked at the previous, this is oil, and this is the previous month they were looking here in January. So the price of oil spiked in January. Okay, it's a big move from 69 to like $81 a barrel. As we know, oil is in a downtrend, don't forget, okay? So that spike probably added to inflation. And look, going forward in February, way back down again, because there's really no demand for oil. I don't see oil spiking again. Like I said, the only way I see oil spiking is if we print a crap load of money again, like we did in 2020, okay? Because I don't see that happening, especially when the economy is doing okay. It's not doing amazing, okay? So, and we're gonna ease, and we have no supply problems when it comes to oil. So, even a potential war in the Middle East wasn't enough to rip the price. So, you have everything you want as an oil bull, and the price still doesn't spike. You better stop being an oil bull. Okay, so we know that the oil is going down in February, so probably inflation going forward is probably going to be lower. So that's why, back to SPY, I think it was quickly bought back up quickly. This candle right here. Opened lower, went a little bit lower, then boom, throughout the day. Up higher throughout the day. So despite the fact that the inflationistas and the current market narrative, do you remember the current market narrative? It's this. Okay. Every time we get strong economic data, it leads to higher inflation expectations. And then we just had a hot inflation print. So it fed the hot inflation CPI fed the current market narrative because they think that less future rates cuts, which are bad for markets, so you sell. Okay. Basically, the whole current market narrative is based on the theory of it's the bond vigilante mantra, which is rates are going to stay high. They're not going to fall because inflation is going to stay high. Okay. They got exactly what they wanted. Higher, hotter inflation, and it was real hot. Hotter inflation than expected, and it was bought up. I mean, this is telling you that the current market narrative is wrong. The bond vigilantes are going to be wrong. They're going to get killed. And what happened to rates? Speaking of the bond vigilantes, the U.S. 10-year. Okay, this is Monday. Wednesday ripped. Wednesday, this was the move that rates are going up because of the hot inflation. Okay, remember, they're still in the middle. They're in a consolidation pattern, trying to break higher and going lower. My view is it's going to continue to go lower. This move on rates and the subsequent drop is very bad news for the bond vigilantes and the current market narrative. Here, we mentioned, let's talk about this right now since we're here, okay? Last week we mentioned that this pattern of going up, consolidating, going up, consolidating, going, a series of higher highs, higher lows, is still a positive construct for the bond vigilantes. Like they're saying, we're just consolidating before going a step higher, okay? Because I mentioned that last week that this pattern could be a positive for bond vigilantes, and it could be positive for people like me who think that rates are going down. Because look, for people who think that rates are going down, we can see that it hit this previous peak and it failed. So it was a false breakout. Okay, so there was fuel in this story for both the people who think rates are going down and the people who think that rates are going up or they're going to stay high for a long time. Okay, so it fed into both narratives. However, as the week progressed and rates started going down, you couldn't get another one of these big legs up, okay, which is bad for the bond vigilante case or the current market narrative, because that's probably going to mean that they're going to keep drifting lower. Okay, we don't know. I'm just guessing that this move here in rates, this is Monday, this move here, ripping on Wednesday and then coming down on Thursday and Friday, which we'll discuss, is bad for the current market narrative and good for stocks and our market narrative, which is bullish. Okay, so the current market narrative is a bearish narrative. Okay, that's why I don't believe it, because it goes against all the macro data. It goes against everything that we've talked about this whole time in the WTW series. Okay, so this is Wednesday. And of course, on Wednesday, rumors are coming out that Trump is going to talk to Zelensky and Putin, and the war in Ukraine is going to come to an end. So another positive piece of news that helped with our narrative, which is a bullish narrative. Okay. So on Wednesday, big Wednesday day, the bond vigilantes, the current market narrative, they got everything they wanted, and it still went higher. I don't know why you still want to be bearish at this point. Okay, this is a clue that the current market narrative and the bond vigilantes are wrong. And this is a bullish market. Okay, so that's Wednesday. Let's move on to Thursday. What happened on Thursday? The next big inflation print is the PPI, the producer price index. They thought producer prices are going to spike. What happened? Well, basically the core PPI came in at 0.3% month over month, and they were expecting 0.3%. Let's see here. The PPI month over month. Okay, came in at 0.4%. Well, that was the headline, came in at 0.4. I was talking about the core PPI. They don't have it here. PPI core, I don't see it. Okay, so we'll go with the headline PPI first. It was 0.4, and they were expecting 0.4. They got in line. They're expecting about that. And the core PPI was 0.3% month over month change, and they got 0.3%, so nothing. Okay, and remember the previous one was 0.5, so it's coming down from the previous one. Okay, so this is like in line, exactly as expected. So what happened when you get something that's exactly as expected? Market rips massively. Okay, market rips massively because the narrative of super hot inflation is not being borne out in producer prices. Okay, which is not that important. The most important one is the PCE and the CPI, but it just goes to show you that the current market narrative, the bond vigilante case is weak, and the bullish case is much stronger. Okay, that's a lot of buying throughout the day. Okay, it went from, let's see here, the SPY went from 604 to like 609, almost 610, right at the highs. Okay, touching the highs. This market wants to go higher. Okay, so Thursday also we had initial claims on Thursday, and the initial claims came in at 213,000, and the previous one was 226. It's still in the low end. Again, exactly as we thought, exactly in our range. No panic, no unemployment, no spiking higher. So it fits our macro. So the macro news, and that's basically on Thursday was the last piece of big macro, which is the PPI. So on basically this entire week, the big inflation fears were completely unfounded, despite the fact that they got a hot print on Wednesday. They got exactly what they wanted. And still the market rips in their faces. You shouldn't be a bear. I'm just telling you, it just goes, it's going to kill you. Okay, at this point, all the market action, the technicals, whatever you want to call it, but most importantly, the fundamentals are screaming that this is a bullish market. Okay, so, and we saw previously that the US 10-year reversed because of the PPI, and then this is Thursday. Okay, reversed on Thursday, the US 10-year yield, and on Friday it continued. Okay, so yields, like I said, are in the process of coming down. That's what I think. Okay, so let's go back to SPY. That's Thursday. Friday, Valentine's Day, nothing. Okay, still holding around the highs. Okay, no macro data of relevance. No macro data of relevance came out. However, they had a slew of data that did come out. Okay, people look at retail sales. They look at which were worse than expected. They look at what else do they look at here? They look at export prices, import prices, industrial production, capacity utilization. All of these things that are supposedly important are not. They're lagging indicators. They have no predictive value, and as traders we can completely ignore them. Okay, we just look at the inflation figures, which either support or detract our thesis. Okay, and they're usually gonna destroy the current market narrative and support the bullish case. Okay. So what else happened on Friday that was big news is that no reciprocal tariffs are going to be put into play. Like Trump is delaying the reciprocal tariffs tactic, okay, versus China. So that's good. So Chinese stocks are ripping. Let's go over to the Chinese stocks. FXI. So all this entire week was very positive for Chinese stocks. And this is the FXI, which is the large cap Chinese stock index. Where's Monday? Let's mark it. I think it's this one right here. No, it's Tuesday. This is Monday. Okay. This candle right here. Monday, Tuesday, Wednesday, Thursday, Friday. So all week they ripped. They went from 33-ish to 35. That's big for an index. Okay. So for me, I like to, when it comes to China, I like to trade the biggest stock in this index, which is Baba. Okay, Alibaba. As mentioned, the thoughts on the Chinese market. I think they're going to come with a big bazooka. I'm always playing the Chinese market that way, and I played the Chinese market using Baba calls. Okay, so I'll give you an example of how I looked at and traded the Chinese market for the past couple of months. Okay, I traded BABA, and I thought around this time here, okay, I bought the BABA 87.5 110 call spread. Okay, that means that I did this in December. Okay, around, where's December? Here. So you see, previously when they were expecting a spike, okay, let's talk about the BABA trade. They're expecting a spike not a spike. They're expecting a massive money printing machine to come online. Okay, so the stock, BABA stock, ripped from 80 to 116 in anticipation of Xi announcing massive stimulus. Okay, he announced stimulus, but not as big as the market wanted. So then BABA tanked again. Okay, but for me, I looked at this as an opportunity to look at BABA. Wait, I wasn't in here. Okay, so I missed this move. However, this move triggered something in me. It told me that the market is primed. The Chinese market is primed for another move like this. Okay, so next time I get a consolidation, this is what I'm thinking here. I'm thinking, I don't know how high it's going to go, but next time, I know it's going to come down one of these days. And when Xi announced stimulus, but not as high as the market wanted, that's an opportunity, because I know, one, that he does want to stimulate. Okay, so it's not a fake. It's not like he won't at all. And two, he's trying to find out the right amount. Okay, which is, it's neither here nor there. It's up to him to decide what to do. But the thing is that I knew going forward that he's going to announce another stimulus, because he didn't quite get it the first time. So the market was massively disappointed. So for months, this was in October. Okay, they slapped it down for 2 months, all the way down to December, until I saw a consolidation period here. Okay, I don't know why it spiked here, but maybe there was a rumor that he was going to announce, that Xi was going to announce a stimulus, and it didn't happen. But whatever the case, it went down here and it consolidated. So here in December, towards the end of December, so it was around here. Okay, here, when they were trading around $84, when BABA was trading around $84, I bought the 87.50 110 call spread. 110, which is about the heights of the previous highs. Okay, and I got into it for a price of 368. Okay, so it cost me 368 to buy a call option at 87.50 and to sell a call option at 110. What does that do? Well, let's bring out the calculator. Make it lower. So what does that mean? That means that I am going to be long BABA. Okay, I am long BABA at 87.50. Okay, and then I will actually get out of BABA at 110. Because the call, when you sell a call, it means you limit your upside. Okay, but you get a premium. Okay, and I did this call spread for $3.68. So it cost me $3.68 to enter the trade. Okay. So if the stock goes up to 110, I will realize the maximum potential of this trade. And the maximum potential is 110 minus 87.50. So it's $22.50 per option. An option is 100 shares, so per 100 shares. So let's say you did 100 shares or one option. Your maximum profit will be this times 100. Okay, which is 2,250. 2,250 per contract, per 100 shares. Okay, but it cost you $3.68. It cost me $3.68 times 100, so minus 368, which is your cost. So your maximum profit is $1,882 per contract. If you did 10 contracts, which means 1,000 shares, you just times this by 10. Okay, so that would be your maximum profit. Even if it goes higher, look, Baba, it went at 124, you're capped at 18. Okay, and the reason you do this is because it lowers your initial cost base to 368. Otherwise, it would have been maybe 500. Let's go back to one contract again. Let's divide it by 100. Our cost base was $3.68 per contract. Okay, maybe it would have been 5 without it, and there were no guarantees that it would get there. Okay, so, and if the stock fell anywhere between 87.50 and 100, I would get a proportion. I would get something in the middle of 1882 and 0. Okay, so this is just the maximum profit. I can get anywhere between that. Let's say it's closed at 100. My profit would be 100 minus 87.5, okay, times 100 shares, which is 1,200, minus, because I have one lot is 100 shares, so I will make $1,250 per contract per 100 shares, and then I have to minus my 368 because it cost me 368 per share. Times 100 is 368. So I will make $882 per 100 shares that I own if it closed at 100. Okay, so the maximum is 1882. Okay, so when here, okay, let's put that down for now. So when I entered this in December, I had no idea here. I had no idea what it would do. Okay, I just took a risk based on this consolidation, waiting for it to go up, and I gave myself till now February. Okay, so the option that I bought is going to expire February 21st. Okay, so I gave myself 2 months for this trade to realize. Okay, and it happened. It started spiking up before there was any announcement. So they were anticipating somebody knew something. Somebody always knows something, that something's going to happen. And nothing has been announced yet. Just that tariffs are better or whatever, but nothing has been announced yet about stimulus. Okay, we didn't get any stimulus talk, but I think maybe we're going to start to get some soon. Okay, and the reason I exited the trade was I realized about 97% of the gain. Okay, because it expires next week, and I already realized almost 100% of it. So why risk it? So I just got out of the trade this week, this Wednesday. Okay, around when it was at 118. So it's at 118 around here. Okay, let's get more. It's on Wednesday. It's this candle over here reached 118 around here. So I got rid of it around here, and I realized about 97% of the full potential that I could have realized per contract. Okay, because you don't want to hold it until expiry. You don't know what happens. You know, you can go all the way back down again if something bad happens. Okay, you have no idea. So it's getting close to expiry. It expires next week. I gave myself 2 months. I realized 97% of the full profit, so I'm out of that trade. So that's how I decided to play the Chinese market. However, I'm waiting now. I'm going to wait like I did this day in October. Okay, now I'm out. I'm out of my Baba trade. It was a good trade. I'll take my money and I'm going to run, and I'm going to wait to see what happens. Okay, you don't have to panic, because if he announces stimulus and it goes up, maybe the move was already made. It's going to consolidate some time, and now you have the wind at your back. Then you could enter again. Okay, you could always make money. It doesn't matter the price level. Okay, it matters the fundamentals and the potential move. Okay, so that's how I played the Chinese market these past 2 months. Okay, so let's go back to SPY. Another thing that I wanted to mention on Friday is that Bitcoin. I really like Bitcoin here. Okay, it seems to be a lot of pessimism out in the Bitcoin space. Okay, and we're getting a consolidation pattern here. So I started to play Bitcoin here with some of the proxies. It's consolidating. You have pessimism that is like at the fear levels, let's say. Maybe not super extreme, but enough to see the consolidation and to enter a trade here. Okay, again, you can buy call options. You can do whatever you want. You can buy the Grayscale Bitcoin Trust. Again, consolidating, which mimics Bitcoin, or you can buy the Fidelity Bitcoin vehicle. Again, same picture. I changed it, but the chart doesn't, because it's just Bitcoin, okay? It's consolidating here. Or you can buy proxies like MicroStrategy. It's consolidating. It's almost the same pattern. Okay, buy call options here, call spreads, whatever you want to do. Or you can buy Marathon. Okay, lower here. This one doesn't have as much of the profit potential. Maybe focus on MicroStrategy here. Might be the better play. You get a big move coming up. But I think that Bitcoin is bullish here. Okay, that's what I noticed on Bitcoin. A little trade that you guys might want to do. Okay. I started playing it with Mara, but I'm going to start getting into, looking to get into the MicroStrategy as well on this Bitcoin move. Hoping that when Bitcoin moves, MicroStrategy will move much, much more. Okay. So that's my potential trade going forward is MicroStrategy. So we had a good week. Friday ended at the highs. Market, initially when I started buying the market here when everybody was scared, I thought it was going to be a double bottom. It was going to break. And it looked like it was going to break. It didn't. It went back down. And I was hoping for a cup and handle, where guess what? Now we have that cup and handle in the S&P 500. When it breaks, it's going to go to our target, like we said, around, I was saying 620, 630, but it could even go to 640. So let's make it a little bit better. So recapping the week, there's very bullish pattern technically, very bullish fundamental, very bullish fundamentally as well, with all the macro data going on our side. So I don't see anything else to say but stay bullish.